Let's see. Well, good afternoon. Today is flying by. I don't know about you, but I'm telling you, today just kind of flew by. But I'm here. It is noon on Wednesday, WCW, Woman Crush Wednesday. And so today we're talking about retirement readiness and really talking about annuities as well as life insurance a little bit, right? So I know that many of you have questions about retirement readiness, and so I want to definitely talk about what we have going on as it relates to retirement readiness and what we need to be focusing on, so to speak, right? It's going to be a really quick presentation this morning, but we want to make sure that we cover as much as possible the ground that we can in this short amount of time. Let's see. Let me go live over on TikTok as well. And so here we are. So when we look at retirement readiness, most people, I ask the question, do you have anything saved? Most people tell me, oh, I don't have anything saved, or I'm just getting started with my savings, or something along those lines. Well, let's just think about this: the time value of money. If anyone has ever, had a discussion with a financial advisor, that money makes time. That it's the compounding in your account that's going to really allow you to be able to leverage what you've been able to contribute to that account. So you have to contribute something to your retirement account. And I would suggest that you do that sooner than later. I've had too many case studies to show people how a person in their 20s versus a person in their 40s. A person in their 40s, for example, will pay a lot more, and it's going to be a lot more expensive, and they're still not going to be able to catch up with the person in their 20s had they just started years sooner. So whatever you do, I know some people don't like to save. Some people just, that's not in your discipline, is not in your habit. And I always tell people, and how you do one thing is how you do everything. But I will suggest, if you are not good with money, you probably need to be saving yesterday, right? Or yesteryear or years ago. But it's not too late. All hope is not lost. There are a lot of plans out here that can help you actually catch up, especially if you're doing a whole lot better today than you were years ago. Because the more that you can put towards it, there's actually special readiness programs available to you. You just have to be willing to hunker down for about a good 5 years. I like to call it the 5-year retirement plan. Literally where the banks will give you $3 for every dollar that you put in to help you grow your account. You heard me. So that is what we call the 5-year retirement plan. But retirement readiness is so important because the inflation rates that are here. The inflation is skyrocketing year after year after year after year. And if your retirement account is not competing with inflation, you are already getting poorer every day. Okay, so you're already not taking care of your older self. So I know it's not a problem today, but I promise you, if you can just squeeze a little bit more, because I promise you, you do have enough today. People always say, I don't have money for insurance. I don't have money for this. I don't have money for that. You have money for what you want to have money for. Let's be clear about it. Y'all know I'm a straight shooter. And so I can help you find anybody that can help find money all day long. I can help you find your money, because a lot of times you don't even know where your money is, right? Like a lot of times you don't even know the subscriptions that you have that's still coming out of your account, and you're frustrated because the money's coming out. So I know I might be stepping on some toes, but we have to reprioritize, because at the end of the day, are you going to become a financial burden to someone else in your older age? Are you going to have to rely on someone else in your older age? Are you looking for hopefully a knight in shining armor to come and take care of you in your older age? Or are you going to do something about it today to take care of yourself? Right. So there is a sense of urgency right now because of the inflation, right? Inflation is one reason, but of course, healthcare. Let's think about it, right? 80% of people in their, senior years are going to have health challenges. That's just a fact. That's not something that we're just making up. And so if that be the case, does your retirement account that you currently have allow for some type of health challenge? You have to think about that, right? Heart attack, cancer, stroke, dementia, Alzheimer's, anything, right? Does your account or your parents account? So if you have, aging parents, are they going to be in a better position because you've got the right type of coverage to where if they have to, if they have to go to a nursing home or something of that nature, you are able to help them because you have the right plan in place. That's the type of plan that we're talking about, even on your aging parents, so they don't become a financial burden to you. And you have to dig into your retirement account because now you didn't put the right plan in place for them. Okay. So retirement readiness is super important. And we're going to get right into annuities a little bit more, because I know that all of you voted that, pretty much more all of you voted that you want to hear more about annuities than you want to hear about life insurance, because most people think they know what they know about life insurance. But let me tell you something. Life insurance serves some of the same purposes as an annuity, but it's actually better. And here's why. A life insurance policy is better than an annuity, and I'm going to give you the differences. So an annuity is really a way for you to buy income in the future. So if you didn't already know, Social Security is a form of an annuity, all right? It's just not one that you constructed. It's one that the government has in place, okay? So if you can design your own Social Security, or supplement your Social Security, or replace your Social Security if for some reason you haven't been paying into it, or if it's not going to be around, because economists say between 2025 and 2032, there isn't going to be any Social Security. If that be the case, are you prepared? You have to ask yourself that question, right? What kind of income are you going to have? The first question that we want to ask you is, what is your gap going to be when you're older than where you are today? Are you going to be making more money than you're making in your older years? Are you downgrading your lifestyle? Are you upgrading your lifestyle? It's a lot of questions. And of course, if you go to ShatikaHusser.com, I ask you all those questions on the retirement tab of ShatikaHusser.com. That and then some. There's like probably 16 questions on there that you probably haven't even thought of. But I also have a free retirement planning guide for you to download, and you go to Shatika.com. You can go ahead and download that free retirement planning guide. It's like an 18-page checklist and guide to help you take action on your retirement, because this is a serious matter, whether you want to believe it or not. Are you going to retire broke? That's the first question I would ask you. Are you going to retire broke, or are you going to retire with an income? If you're going to retire broke, then you need to be a part of this conversation. You need to be having some plans in place. You need to make sure that you are doing what you need to do to take care of your older self. And if you have not done that, then I invite you to do that today. I invite you to take action today. Go ahead and get the book. Go ahead and take the action. Do what you need to do. All right. I know many of you looking at this military person behind me. I still have that same entrepreneurial spirit and militant spirit today. Nothing's ever going to change about that. I was like that since I was 8 years old. So I'm always going to push you to doing more, kind of like the coaching side of me. I am a certified professional coach, but I'm not coaching you today. Today, I'm just trying to get you with a sense of urgency to take action on your retirement account if you haven't already done. There's nothing more important right now than beating inflation, because every single day you are getting poorer and poorer and poorer if you don't have your money in the right type of account. Your account should be compounding and making money for you while you're sleeping. Okay, the bank account is not doing that for you. Okay, so there is an account that can do that for you and give you the benefits that you need around healthcare, around leverage for if you need a loan for an emergency fund, because the average person don't have $400 to put towards anything, let alone a retirement account, right? But what if you had an account that you can access, and while you're taking it out for an emergency that you didn't plan for, the money still compound for you inside of your account as if it never left? I'm going to say that one more time for the people in the back and the people that didn't understand. What if you had an account that if your tire blew out, you needed a new car, whatever, you can take money out of the account, literally buy you a car, and the money still be compounding inside of the account as if it never left. And you get 12 months to not have to pay any interest on that loan. Would that be all right? Would that be better than the situation that you currently have? Or do you feel like cash is better than leverage? Because I'll tell you all day long that you need that cash. You need leverage more than you need the cash. That's why people use credit cards. But unfortunately, with a credit card, you're paying somebody else instead of paying yourself. And in other words, your credit card is not going to give you a death benefit. Okay? Your credit card is not going to be able to allow you to be able to take care of yourself if you have some type of chronic, critical, or terminal illness. It's not. Okay, if you have heart attack, cancer, stroke, dementia, any of these type of challenges, long-term care needs, is your credit card going to pay your medical bills or pay you? That's what we're talking about today. You need to understand that when you have the right type of account, the right type of benefits, you're going to be able to leverage your life insurance policy, and more specifically, an IUL, unless you get a whole life with a rider called a living benefits rider or a LIBR rider, LIBR, meaning lifetime income benefit rider. Okay, whole life policies don't come with them. You have to add that to it. But the whole life policy, the difference between it and an IUL is you have access to more cash up front than you will ever in an IUL. An IUL is specifically for a retirement account because you won't have access to 100% of your cash value until year 11. So let's be clear. The fees are what we call surrender charges, and they're coming down year after year. So if you're someone that have the discipline and you can save and you can put money towards it, then you need an IUL, okay? Long-term play, short-term play, whole life policy. Really simple. I think we make this really complex. People use whole life for banking, for paying off debt. They need something quick. They need cash accumulation. They want to pay off emergency. A whole life is the way to go. Any other route is going to be a longer route, like an IUL, okay? So let's be real clear about that. So I just want to, okay, so let's talk about this readiness. Retirement readiness. If you're just joining in, because I see people coming in and coming out, these different things. If you're just joining us here on YouTube, I want to recap really quickly. We're in here, we're talking about retirement readiness, okay? But what we're going to do is kind of break down the differences between the annuities and the life insurance versus the life insurance, okay? They're both governed by a carrier, an insurance carrier, all right? So if you didn't know, banks go to carriers. Corporations go to carriers. That's how they multiply their money while they're sleeping. That's how they compound their money. Okay, so a bank that's going out of business is a bank that didn't use insurance like all the other banks. Simply put, because they realize that they have to be a safety net. Okay, bank-owned life insurance, corporate-owned life insurance. Why don't you have it if you don't have it? If you have it, amazing. That's great. Let's talk about the term. Does your term give you all your money back, 100% of your money back? Does your term give you living benefits? Does your term give you the cash value? If your term don't do these things for you, you need to get in the right term so you can get the most amount out of your term policy. Nothing wrong with term because it's going to give you the most amount of death benefit than anything, right? For the same amount of premium, you can get a lot more death benefit with a term than you could with a whole life or with an IUL. All right. But you won't get as much leverage as you would with an IUL because the IUL is going to grow at a faster pace. Historically speaking, past results don't equal future results, but historically speaking, an IUL will outperform a whole life policy all day long when you start talking about compounding and growth inside of that account. Okay. So annuities, why an annuity? People like annuities when they have, say, a 401k, a 403b, or 457, a TSP, IRA, these types of accounts that are all mutual fund based, meaning that you can lose money in them, meaning that they're going to be 30 to 50% higher in fees. If that be the case, should you be inside those type of accounts that don't give you any benefits? Let's say if you have a chronic, critical, or terminal illness, they don't give you any type of death benefit. You don't get to access them for liquidity if you have an emergency fund. These are the types of challenges that people are having with these retirement accounts that have been failing them year after year after year. There's no leverage. There's no liquidity. You can't use them. And listen, you're going to pay interest if you take money out of those things, right? Where if you had an IUL or say a whole life and you access a loan as 100%, no interest that you're going to have to pay for the first 12 months, depending on which carrier you're with. If the wrong carrier, you're going to end up paying a little interest before 12 months, okay? So the annuity is for people that maybe can't get a life insurance policy. Maybe they have some type of a retirement account that they want to roll over so that they can make sure that they get a bonus as well as stop the bleeding. When you start talking about my account is not going to be able to pay me the interest that I'm looking for, it's not going to compete with inflation. Annuities are one of the best ways to compete with inflation in this environment that we're in. If you're looking for a retirement account to actually, pace with inflation or exceed inflation, then it's going to be some type of an annuity account. It usually outperforms an IUL in some instances. It's depending on which carrier, which type of plan. It's a lot of variables, but generally speaking, an annuity is going to be more aggressive than an index universal life, but it's not going to give you the liquidity that an index universal life is going to give you. An index universal life is going to give you a lot more benefits in terms of, chronic, critical, terminal illness, death benefit, those types of things. You can use a death benefit with an annuity, okay? You can use a death benefit with an annuity. So that's how they are alike. You can use what's called a wellness rider. That's how they are alike. With a wellness rider, if you become terminally ill, you can access those funds immediately, all right? You also have probate, coverage. So if something happens, you can make sure that your money is protected by having it inside of an annuity or a life insurance product because those things are protected against probate in that sense. Okay. Some people look for trust. It just depends on what you have going on with taxation. You may want to use a trust because of the taxations. But at the end of the day, a lot of people use annuities to do some of the same things as it relates to, protecting their money from loss to the market Okay, so if you're looking for a safe haven account, you can get what's called an index annuity, not a variable annuity. That's why if you heard anything bad about annuity, it could have been that they had a variable annuity. They didn't have an index annuity. Index meaning that you have the best of both worlds. Okay, you get to participate and make money in the market, based on what the market's performance is. If the market goes up, if the market crashes and loses all of its money, you don't have to worry about a thing because you won't lose a dime because it's called an index annuity. All right, so another recap: index annuity versus variable annuity versus just a fixed annuity, right? So you got the fixed index annuity as well, so you know exactly what you're going to make on that annuity. Just a typical index annuity, you don't know what you're going to make, but you know that you can capitalize on the market and the market's growth by up to, depending on which carrier, 300 and something percent of the growth amount. So if the market does, say, for example, simple math, 10%, that's $10,000, then you can multiply that times 3 for 300%, right? So 100% times 300%, $30,000, right? So it depends on what type of account you have, what carrier you're with. As a broker, we have access to over 30 A+ carriers. We know which ones have what for what type of a account you're looking for based on your health history, ideally based on what it is that you have going on with your finances. A lot of carriers want to look at your net worth. To be honest, you can't even apply for certain types of IULs that's out here. There's some sophisticated ones for high net worth individuals that's going to work a lot harder for you, but you have to have a history of making money, right? You have to have history of being a high net worth earner. So there's all types of insurance that a lot of people may or may not be aware of. They think of it only as a death benefit, but there's some really good and very sophisticated products out there that's going to be able to give you, like I said, 3 times the amount of money that you put in, just to get you help you get saved up properly in a 5-year retirement plan, as well as get you ready, right? So I know this has been a little bit longer than normal. It's 16 minutes on YouTube. We're going to go ahead and bring it in. Let me see what questions are out there, and then I'm going to move on with my day, because I don't know about you, but I have a lot going on as well. And but we always want to be strong. We never want to be long. We always want to jump on here and see what we could do to help you in any way. We want to make sure that we answer your questions. And let's see if there's any questions out here. I'm not seeing any questions over there. Let's see, any over here and any over here. Let's see. All right. I don't see any questions. Don't miss the. Oh, I need to take that off. That's old. There's no symposium going on. That's old. All right. So either way, thank you for joining in today. We're going to definitely be back on tomorrow at noon as well. The goal is to go live, daily as much as possible this week, so that we can get your questions answered, cover the information. If we covered something and you have a question about it, you want to reach out, just type your question on the live that you're looking at this on, and we'll make sure that we get your question answered. We don't have no problem doing that. All right. So God bless you. Have an incredible Winning a Wealth day, and we will see you at the top. If you don't have our free retirement planning guide, you want to go and get that. You want to download that 18-page checklist that's going to help you take action, the right action, some things that you need to be considering if you haven't already. And that's all we have. All right. See you at the top. And retire before you expire. Listen, I am Shasika Husser. I help you get your bank account on fire with a whole lot of lifetime tax-free retirement income that you will not outlive. That's right. So go ahead and make sure that you download that retirement planning guide so that we can stay in touch with you and get you the information that